Hi, this is PR Sundar and welcome to this special episode. I am going to suggest one or two stocks for investment. If you can remember, last week I came out with a video, the value 20 stocks, and I said, there are 20 stocks you can choose. But some people are asking me, sir, why don't you tell us some specific one? And in that video also I mentioned that I like stocks like Hero MotoCorp. And today you see this video is being shot on 20th of May, and markets are higher, but Hero MotoCorp doing very well. And in fact, yesterday the market fell so much, but Hero MotoCorp did not fall much. Why I like Hero MotoCorp? It's very simple. India, middle class, growing, and everybody like to buy a motorbike, and then particularly in the rural area, so they look for fuel efficient motorbike and they prefer Hero MotoCorp, and that's one thing. And second thing, Hero MotoCorp offers a better dividend yield, and I said I always like high dividend yield stocks. And before going to the stock suggestion, I want to tell you something. In 1929 there was something called Great Depression, and US market fell nearly 90%. And of course, that was long before not many people were trading in stock market. And if you look at last 40-50 years, in 1987, and US markets fell, Dow fell 22% in just one trading session. And why? Just before 1987, between 82 and 87, the Dow shot up 3 times. All the stocks were richly valued. And then there was some agreement between US and European countries. US decided to depreciate their currency slightly. That has become a trigger. And then, just one day it was sold off. And then after that, again around 2000, and all the IT stocks shot up. At some point of time, people thought, these IT stocks are richly valued and overvalued, and they started selling. And all the IT stocks crashed like anything, and that is called dot-com bubble. Now, if you see what is happening in US markets, and once again they say the same thing, and interest rate is going to increase in the US economy, and because of that, they do not want to invest in highly valued, high P ratio stocks, and they are just hammering the stocks which has high P ratio, overvalued. And stocks like Apple can fall 20-25%. And the same case with many other FANG stocks. And Netflix has fallen nearly 65-70%. Now, this is the season where people do not want to invest in richly valued stocks. They are looking for stocks which are reasonably valued, or you can say undervalued. How to know a stock is richly valued or undervalued? And the way US markets are moving, I think the people are speculating Nasdaq can correct another 10-20%. It has already corrected 30%. Now the people are talking another 20-30% correction. And yesterday Deutsche Bank came out with a report, S&P 500 can lose another 25%. So in such a bearish market, it is better to keep away from highly richly valued stocks like Paytm. Somewhere some WhatsApp messages going around. I don't know is it true or not. And they say 2 years before, Paytm Mall, its valuation was 22,000 crore, and now its valuation is only 100 crore. Where is 22,000 crore? Where 100 crore? Assume that you bought 22,000 crore valuation. Let us say you bought for 22 lakhs, and now it has become 100 rupees. That is the kind of distraction sometimes these richly valued stocks can. But you look at ITC, the whole market is falling for the last 2 months, and ITC is going higher. In fact, last 2 months ITC is the best performing stock. So why? Because they are not high P ratio stocks. They are all value stocks, defensive stocks. And when the economy interest rate goes up, people don't have more money for discretionary spending. They may stop watching movies, and they may stop going for a tour, or they may cut down traveling in car, they may travel in bus, but they cannot stop eating. So FMCG companies are bound to do very well. Today I am going to introduce one stock which is grossly undervalued, but you may remember undervalued stock can continue to be undervalued for an extended period of time. I think there was some quote in the name of Warren Buffett, okay? A stock which is trading at a price higher than the intrinsic price can continue to trade higher than the intrinsic value for an extended period of time. A stock that is trading below the intrinsic value will trade below the intrinsic value for an extended period of time, but there will be one point where definitely it will come back to intrinsic value. These are the grossly undervalued stock may continue to trade undervalued for an extended period of time, for many years. But we hope one day it comes back to at least the intrinsic value. The stock today I am going to discuss is REC Limited, Rural Electrification Corporation. So you look here, I am just showing you the Rural Electrification Corporation, that's called REC Limited, and which is trading around 118 rupees today. You look at the market cap is 23,000 crore. So it's a big company. And second one, it is a government company. So overnight they will not close down. And current price is 118 rupees. But look at the book value. The book value alone is 260 rupees. So fast, for the people who don't know what is a book value, today you close down all your business, dispose all your properties, and whatever money you are getting, distribute to the shareholders. The shareholder will get 260 rupees. But the stock is trading at 118 rupees. And you go to any bank, you don't get interest more than 5 or 6%. But look here, what is the dividend yield? The dividend yield alone is more than 10%. Where do you get more than 10% interest nowadays? So this is a very high dividend yield stock. And look at the return on equity. So they are making almost 21% return on their equity, and almost half of the money they are giving as a dividend to the shareholders. Probably they don't have scope for expansion. But again one may ask, today they may give the dividend, tomorrow they may stop. Don't worry. Majority of the stock is held by the government. The government need more money. So the government will always ask these people to give liberal dividend. So they are actually not declaring dividend for you, they are declaring for government, because most of the dividend goes to the government. So indirectly you also benefited. This stock I've been observing for the past many years, and it went up to 220 rupees at one point of time. I think the 52-week high is 170. Now it has corrected. It's trading very close to 118. And in fact, I decided to do the video yesterday, but for one other reason I could not do it. And yesterday was the 52-week low. Look at the stock PE ratio. The stock PE ratio is 2.32. You look at the stock, maybe I can show you one company, Nykaa, FSN e-commerce. And look at the stock PE, 1150. What is stock PE in a layman point of view? Assuming that company is not growing, assuming the company is also not degrowing, okay, PE ratio will tell you in how many years your money will double. Of course, you will not get back the same double the money, but your net worth will double, your value will double. So that means Nykaa can double your money in 1150 years, right? That means your grandchildren's grandchildren can get double the value. But if you look at REC, your money almost doubles in just 2.3 years, less than 3 years. But again, this is just an example to make you understand what is PE ratio. This is assuming that market is not growing or degrowing. Sometimes market like stock can grow, a company can grow, and sometimes the company can degrow also. So you look at whichever way, at this point of time, some investment, in REC looks really very good. In fact, few years before, once it came to 91 rupees. And that time I bought it and I have announced it in the social media also. And then after that it went up to 160, 170, now it has come back, nothing to worry because you are getting more than 10% dividend yield. This is a good stock for investment. Disclaimer, I am not a SEBI registered research analyst. So this is just giving my opinion, and consult your financial advisor before taking any position. Hope you enjoyed watching this video. Thank you for watching.